Recorded.
Now, everybody, welcome to another edition of Your Money Radio. Let's see here. Don Vandenbord, Alex Katutis, Hunter Mazingo, Danny Stewart is not with us this week. And so a lot of things going on in a quad witching expiration week, just a ton. But fellas, where I want to start is probably not where most stock nerds want me to start. And I want to start with this monthly chart of TNX. And you know what, I can't see you fellas. I can see you now. So I'm going to do this. If I catch that you guys are super bored, I'll move quickly off of this. And what I want to point out to you is I want to go all the way back to the year 2000. So this is a monthly chart of interest rates. I'm going to make, I wonder, and where I'm going, I'm not going to bury the lead here. Are the roaring 20s going to be the roaring 20s? And there's a lot of talk that, you know, after a pandemic, like the 1918 pandemic ended, and then you had the 1920s that ended in that violent crash. That might happen. But what I want to point out is some things that I've been looking at, and I think are super interesting and could affect you monetarily. Everyone in the audience, not just stock nerds. And so here's 2000, and you can see interest rates, and how we read this chart is you see that's at $17.32. What that really represents is 1.732. So 10-year notes right now are at 1.732. And if you come all the way now to the right-hand side of the chart to where 2020 bottoms out, and you can see interest rates going higher here. We're above the mean, and it looks like they want to come up here. And as you know, the higher the TNX goes, as a lot of stock nerds have experienced, the more pain there seems to be for stocks that have their earnings limited by higher interest rates or make their earnings less valuable, such as tech stocks per se. So what you have here is a chart of higher interest rates and inflation. Things tend to cost more in this environment. And the area that I really want to point out to you here is this. Let me minimize the fellas a second so I can see the full chart. I want to point out what happened. So you got this peak in 2000, and you know what happened in 2000, the dot-com implosion, right? But look at what interest rates did into the dot-com implosion. So 99 was the implosion. Do I have that right, Don? And I'm not being facetious. It was 99. It was March of 99. It was March of 2000.
March of 2000.
Okay, March of 2000. And so, but look at what interest rates did on the 10-year notes. There's a monthly chart, so I get it. There's a lot of hemming and hawing in between the weekly charts and the daily charts. But just look at what these monthly rates did from their seemingly bottom on the third ATR. And by the way, if you want to see the years here, there's 97, there's 98, there's 99. They peak in 99, but it was already in place. The top was already being put in place in stocks, and you had this implosion, and then interest rates come down, and then unfortunately in 2001 you had the terrorist attacks, which of course affected everything, not just markets. But then look at what happened to yields. Yields come down significantly, and that gets the market trending higher again, or stabilizing and getting ready to make its move. And now, if you remember, Don, I know you remember this very acutely. This period from 03, and I'm going to just highlight it here, that started the period, Don, as you remember, of higher oil. Remember all those oil companies, Continental Resources, like the first one that comes to mind, but oil started gaining traction. And in this time frame, housing was already hot. After 01, because why would housing get hot after the terrorist attacks? And I was living in California at this time, and I lived through this. In 2001, and I was getting ready to move out of Camp Pendleton and into my squadron. You couldn't find homes. Unless you went knocking on the doors and you said, "I'll buy your home. Are you moving?" And so we had a realtor doing that. That's how we moved into our first condo. And we paid above asking price for it. That was in late 2001, early 2002. And interest rates, if you look at where interest rates were in that time frame. So here's 2002, they were coming off. And so housing started to pick up steam. And then what did Bernanke do from this period, the Fed chair? He started, well, I don't know when Greenspan left and Bernanke took over, but they started raising interest rates. And I want to show you something here before I go any further on this chart. And so this article right here from it's December 13th, 2005.
How did you find that?
The Google. So but I've seen this before. Like that's the whole thing. Like when you've lived through this, you're like, and I'm only 45. And so, but I've lived through a cycle like this. And I'm not saying this is what's coming, because it's a market. Like, Mark from Buffalo makes fun of me. He goes, your favorite phrase is the market, anything can happen. And yeah, it absolutely is. But I've seen this. This is at this point, and the Fed meets 4 times a year. So the Fed the Fed can do emergency. I've never heard of the Fed doing an emergency rate hike. They've done emergency rate cuts. Remember this time last year, the Fed did an emergency rate cut and it sent markets down 12% in a day. They did an emergency rate cut on a Sunday night. And so that was this week. And so here at this point in December of 2005, they raised rates for the 13th straight time. How many years of rate raises is that? It's several. And so that's 3 years of rate, or 3 years and 1 quarter of rate raises. So now I take you back to this chart. I take you back to where we were here in 05, and then you got 03, 04, 05, 06. So you start the rate raises, you can see it trending higher. And then here is 07. Here's 2007. I need you to pay attention to this. There's 2007 stock notes. And so 2007, you can see you just come up to that 2 ATR. You kind of match the peak. And look, Ben Bernanke denies that he killed the housing market and caused the financial crisis. And I'm saying that he was if he wasn't the arsonist, he was the gasoline. And so if you remember the job market at this time, the job market is slowing. You get a jobs report every month. The jobs market is slowing, and yet he's continuing to raise rates into 2007. And then you match that with this. So in 2007, I take you to this article, January 16th of 08, okay? So at the start of 08, it's telling you what happened in 07. 07 inflation was up the largest amount it was in 17 years at that point. So now, just pause. We start raising rates in the early part of 2000, early part of the 2000s. We get them to kind of a peak here. And we know at the start of 07, or excuse me, start of 08, we know that 2007 was the highest year of inflation in 17 years. And I bring you right here. So we have rising interest rates. Really looks like something like this, doesn't it? And what do we have right now that's affecting markets? Inflation. And so what are the differences right now? The differences are Jay Powell doesn't want rates to go higher. I think Jay Powell's doing the right thing, by the way. Let me just get ahead of that. I think Jay Powell is absolutely doing the right thing by not raising interest rates. And he says he's going to let the economy run hot, and he's not going to do anything to stop it. The economy started to heat up, and Bernanke was trying to slow it down. That's a key difference. If Jay Powell raises rates right now, I think he gets another housing issue on his hands. Because what's the housing news right now, Don?
It's mixed, kind of. But refis are at an all-time high. But if the rising rates are gonna slow that, if they continue up,
it's not just refis. It's overbidding on homes.
There's no inventory.
There's not. Thank you, Alex. There's zero inventory. Everyone who wants a home right now because of the inventory issue has to go outbid the person who wants the home as well. And because rates are still at historic lows, even though they've been going up lately, it's immense competition out there. They can't build homes fast enough to get enough inventory into the market to kind of cool down the overbidding. And now interest rates without the Fed are going higher. This is toxic. And
So
something my friend noted is that people today are borrowing on anything. You could rent, you could lease your couch, you could
Yep.
lease furniture, you can get a loan on your TV. Like I've never seen it, and I didn't think of that till recently. I was at a store and I was getting a new couch. They're like, do you want to finance this? I'm like, no, I'll just buy the couch. And like, do people do that a lot? Like, yeah, almost everyone. I was like,
the Peloton. So a couple of these companies have come public. Affirm is one of them. They're Peloton's biggest creditor. And so when people go on Peloton.com to order the bikes or the treadmill, they're using Affirm. And Affirm uses an AI algorithm that breaks up the payments to what they deem is acceptable for the person who's buying the bike. Rent-A-Center bought out Acima before they could go public. Acima was private. They're a financing arm of the same nature. And so, yes, and it's low interest rates that are causing this. So there's a lot of talk right now of what Jay Powell's doing to the dollar and to the savings rate. And he's forcing people in the riskier assets. But he's doing that because this is really, I can almost hear Danny saying this is a Hobson's choice, because how do you stop this? Like right now, interest rates, as you can clearly see on the right-hand side of this chart, are going up without the Fed wanting them to do that. That's not good. And then you keep this cheap money policy in, and nobody can save. And so then you force them into some of the, look, when I say riskiest assets, I don't know if you're home. I mean, if you were like, well, I'm not planning to move, Tim, and my home provides domicile to me, great. That's wonderful. But if it's your biggest asset, and by the way, we still have a challenged jobs market, right? The jobs rate is still, is it as worse? Does anyone know? And I should have researched this before I got on the air, and I apologize, but I will feign ignorance. Is it as bad still as 2008, or has it gotten a little bit better? I put you guys on the spot with that. You can think about it.
Yeah.
So the jobs issue is not going away, right? We still have a jobs issue. We have people that are overbidding on homes. There's no inventory. And so it's all there. And so now let's just delve deeper a little bit. So you've got the inflation, you've got the rates going higher. And then I bring you this article from January 31st of 2007. And so same kind of web search here. And Fed leaves the short-term rates at 5.25. And oh, by the way, here's the rates. Look at the Fed moves. So here's 03. Here, look at this chart, stock nerds. Here is 03. We're going to start at 03, they floor, and then look at 04 and above. And so in sometime in here where I'm drawing on your chart, sometime in there, that's when jobs start slowing. The jobs market starts slowing, but the housing market keeps going. They're not just like in the same channel, same track, working together. Jobs started coming down, and you knew this from the jobs report. Fed keeps raising rates into a slowing economy. The economy's slowing, and Ben Bernanke, that pencil neck geeks, keeps rates going higher and doesn't have the foresight to cut them at the start of 07. And what the hell happens at the start of 07? It's the unwinding of the markets. And so what happens? So look, in 2007, let's do SPX. We don't have to do NDX, which got even worse. So we'll keep it on a monthly chart, stock nerds and market lovers. So minimize it just a little bit more for you. So in 2000, I zoom in, here's 07, market's coming up. Now we hit the highs, third ATR. And we start rolling over. And what's the rollover? What's the issue causing the rollover? Yeah, the banks are starting to fail in September. You start having issues in September of 07. And Ben Bernanke, that's when he first takes action and decides to cut rates. These ignorant fools were raising rates into a slowing economy. So I applaud Jay Powell. Like Jay Powell is absolutely doing what he should be doing, not raising rates and telling people he's not going to raise rates. Because if he told people he was going to raise rates, what do you think would be happening worse to stocks right now? Be getting effing slaughtered.
Across the
You know?
board instead of just in
Yeah.
tech. Yeah.
Yes. You don't think you don't think this market has a memory? This market has a complete memory of what happened back almost 15 years ago. Is it 15 years ago? 15, 16 years ago? You think this market doesn't remember that? That's the furthest thing from the truth. You're seeing it right now. Jay Powell every day prays to the god of interest rates. Who is that? Is that a Greek god, Alex? I figured you might know that. You do, Alex.
Yeah, we can make up a name.
Yeah, why don't you work on that, Alex? Let's get
All
to the
right.
god. Let's get the the god of the TNX god. Give me a name for that. Athena Bernanke.
I'll have to think of something.
So this market is all kinds of effed up right now, and you don't see it because you've got these S&P stocks and the inflationary stocks. Look, this market is at a crucial precipice, I believe. Doesn't mean I'm right. It just means that if Jay Powell can't somehow get a hold of these rates, and we have think about all the people that now the one thing we don't have, I don't hear the plethora of adjustable rate mortgages. That's what it was. It was Bernanke raising rates into a slowing economy, and most people were getting these adjustable rate mortgages. And when the rates went up, their payments went up. And when people and they kept renting out their homes, and when people were renting out their second, third, and fourth homes, and people were losing their jobs, you'll eat first before you pay your rent. And so that, look, I don't know if that's brewing, but that's what I see happening. And so you look here at Bernanke gets a little defensive in this last article where he says, back off, I didn't do it. And really, but here you can see here's 95, here's 2000, here's 05, and housing peaks like 05, 06. Look at this, early 06. Housing peaked in early 06. It took from the beginning of 06, housing's peak, and the declining jobs market, and Bernanke's still raising interest rates.
But in his defense, a lot of the problem too was individual banks. They shouldn't have been issuing loans to people that couldn't pay.
Ton of blame to go around, but
yeah, there's a lot of blame.
I contend that if Bernanke, 13 raises in that period. Go ahead, Don.
The banks didn't care because they were selling the loans. Once the loan was closed, they got it off their books and it was packaged into a subprime or a mortgage-backed security, and Wall Street was selling it to anybody that wanted yield. So there was plenty of demand for the houses at that point. It wasn't until, and the Big Short movie and the book about the collapse of Lehman Brothers goes into this in fantastic detail about how Wall Street manipulated not letting the bonds drop until they were able to get on the right side of the trade. It was totally manipulated on Wall Street
and then
until they were able to take advantage of.
Because they were selling insurance. Like you have the product that Don's mentioning with the collateralized bonds, and then AIG is going to sell you insurance on top of that to make some money. Hey, you can't lose here. They're bonds, and you have insurance. And who knew this would happen? And so, but think about the time frame. Like I'm talking about this. It's March 19th, 2021. The jobs market started slowing down. We already have now you could say the jobs market is accelerating. And look, it's really hard to look at the jobs market not in a macro sense. If you look at it in a micro sense, by weekly jobless claims, they're under 1 million. That's to be applauded. Like, thank you. They're under 1 million, but they went up again this week. So I don't know if going week to week on jobless claims is the way to look at it. How are jobs trending? And that takes months, right? And so you have this monthly slowdown in jobs. Bernanke's still raising rates. and then housing peaks in 06. But it isn't until the start of 07 where Bernanke says, "Uncle, I'm not raising rates," at the beginning of 07. And then it took 10 months later for the thing to really start to fall apart.
Well, he wasn't coming off of a pandemic. He didn't have an event to
That's the only thing I would say.
allow him the backstop of saying I'm doing this or I'm not doing that.
Agree? Oh no, I'm making a ton of angered assertions in hindsight. So what you just raised there is a fantastic point. For the backstop for Jay Powell right now is this pandemic. But can they? This huge difference right now. And if we go back to this month, I'm going to keep it on the monthly chart of the TNX because I don't think it helps to look at the TNX. I look at it on a daily basis, but just where's the trend?
Well, if you could match up the TNX to what the SPX was doing at the same time, that's what I would like to see.
Oh yeah, let's do that. That's a great. That is the beauty, stock nerds and market lovers. That the fellows have no idea what I want to talk about, good or bad, and you get great questions like this. So what period, Don? Because I want to make sure I outline it first on TNX.
Whatever period you have the TNX up, just bring up the SPX on the exact same period to match up the peak and the trough with the rates.
Yeah. So let's just highlight those real quick. So here is 05.
Because I mean, right now, and you've been on this, you nailed this for a while, Tim. With rates going up, it's affecting tech stocks. That doesn't
he did nail it.
Happen. That's not always the case. But right now, if you're buying a tech stock, you're betting on interest rates coming down, period. Whatever tech stock, throw a dart.
Before I go to that chart, let me bring you fellas back up. I can't see y'all. It took to get tech stocks and interest rates moving up in lockstep, and we'll pull this chart too. It takes typically a bigger sell-off, a pullback, if not a sell-off. Like that's when those periods happen. And that's floating around Twitter a lot right now, where people are talking about this tech stock. Look, I get it. Like, what effect do these interest rates have on Apple sales? Are people stopping buying iPhones? Like, I get the question somebody might ask like that. At the same time, understand that algorithms are written by humans. So interest rates up, tech stocks down. That's an algorithm. You think somebody is going in there and hitting enter on a computer when they see that happening? No, it's happening in microseconds from algorithms. But you have to remember that algorithms don't write. Although there are some AI algorithms that just keep writing themselves, which is really cool, but not for this discussion. Algorithms, for the most part, are programmed by humans, and humans are just doing the playbook. So now, with that said, okay, here's TNX. If I can get my mouse going here. Here's TNX peaking. That's 05, 06. And then let's see how long it took SPX to figure it out. SPX, and let me get these marks off of here. Let's zoom in.
So Tim, are you using this more now than you would have in the past with like the VIX?
Yeah, the VIX is the VIX. Yeah, it's for a lot of reasons why Don has been talking about this for a while. That it's not the S&Ps that are broken. It's the Nasdaq that's broken right now. And the VIX futures, even though I've used them so beautifully for so many times, they are now broken. Just like the put-call ratio got broken. In 2020, because of all the stimulus, the put-call ratio got broken, and it took me to the end of the year, like to that last quarter, to figure out how to use it again. Like that new level I have of 0.7 being the old 1.0 and above, for moderate bounces in the markets. That took me the rest of the year to figure out because they've never injected this much liquidity in the markets. There's not been this level of stimulus, stimmy, as Hunter might say. And so, show me your hands, Hunter. What are they made of?
You got paper hands, right? Or diamond hands. Diamond hands.
No, Nicolette's hand is made with diamonds.
Diamond hands, Hunter. Your fiance's got diamond hands.
That's right.
That's right. She's holding you forever. So SPX here is what the VIX futures are derived from, and that's no longer a good indicator. Now, I do think that if we got a VIX inversion and the Nasdaq's still broken, that the S&P is probably about to take people for a downturn. You're just not getting it in this environment. You're not getting anything with the VIX futures that tell you anything that's about to happen with tech stocks.
Me and Alex actually talked about this a little bit because they don't really reflect the volatility we saw in leading growth stocks in February. Like, the VIX never really got super crazy, but you had leading tech stocks, like a lot of the ones that we went over that broke down really bad, down 30, 40, 50, 60% in a very short period of time. And if you looked at the VIX or you looked at the S&P, you really would never know that unless you were looking under the hood at some of these names. So it's honestly, there's a lot of downside volatility in leading stocks right now. I mean, you can look at yesterday, Square down 9%.
Yep.
I mean, you could throw a dart yesterday, and most all growth to leaders were down 5, 6, 7, 8, 9%.
And you're adding in now a rebalancing. So all the funds that are tied to certain percentage targets have taken this week to rebalance, and it's so hard to figure out what the true move is. At least I
I'm
think
also having a hard time in my notes when I refer to the leaders. Am I referring to the new leaders or the old leaders? Because there are very few remaining from the old leaders, and the new leaders are not your typical growth stock.
Yep. And this is we talked about this on a morning call in February with Danny, and we were discussing, and this is just a generalization, but we were discussing, like, is this going to be the 2-week rotation? And we saw at least three times in 2020.
Yep.
And I just had the sense, I'm like, I don't think it is. And it was really all based on this TNX work I'm showing you right now. Like, I don't know, because you've had some really good tech days inside of these selling, inside of this, I mean, just pounding of certain, like 10%, Alex in Hunter, in Square, when it was because I owned a piece of Square, and I had a call spread for out in April, and I was performing well. It was a 240, 250 call spread. I took it off when I couldn't get, like that one day this week when it went to 250, then came back to 244, and I'm like, you know what, this is done. And then I looked yesterday, it was down at 220, 225.
224 at the end of the day. And
yeah,
previous Wednesday, when the Fed announcement happened and Powell spoke, Square was showing extreme strength. I know it's an initial reaction, but volume came in just to go down 10% the next day. So I mean, I think his name's Jeffrey Kleintop. I think he's the chief market strategist for Schwab. He said it's not a bear market, it's not a bull market, it's a bunny market, just hopping back and forth one way or the other. It's chop.
Yep. And this is there's definitely something changing here in the markets. Like the market is shedding one skin, and it's getting a different one. And I'm not quite sure when we end 2021, will we be talking about Goldman Sachs, Bank of America, Wells Fargo, Stifel, Caterpillar, Deere? Are those the names that are going to lead? Because I think if interest rates keep doing what they're doing, it takes down everything. Because the Fed was in control of this. In the period that we're talking about to start the show, the Fed was in control. They had the mechanisms to raise rates and then take rates down. What did Powell left rates unchanged? And
they can only control short-term rates. The market is going to control the intermediate term and the long-term rates.
And that's the problem right now. And it's going to get to the point where I think the formula has already been the ingredients to the cake are already known to us. If the jobs market were to slow any further, if rates continue to go higher, I think that you're going to see a whoosh in stocks, and it's going to, and if it takes down the small caps, I mean, the small caps are where most of your oil and banks are found. Like, you know, everyone talks about the big money center banks, and I just mentioned them, but a lot of those regional banks are all found in the RTY. They're not found in the S&P. And so, like, but you've got some things in your favor here that might help. So crude, well, let me get this off of a monthly chart, get it back to a daily chart.
Tim, would you mind showing the TNX on the ATR chart, both on a weekly and on a daily?
Oh yeah, sure, absolutely. So let me just finish this thought and I'll absolutely do that. So crude broke decisively yesterday. That's a huge inflationary commodity, and for lack of a better phrase. So just do the work backwards. Like out here in Texas, I mean, they like Ford stopped producing cars, what, 2 years ago to focus solely on trucks because that's all people are buying in this low monetary rate environment where you can get a car loan pretty cheap. And gas prices that have been, by the way, gas prices have gone up, I believe, uh, several months in a row. It's like, it's not
Yeah.
unprecedented, but it's the first time it's happened in a long time. So crude was going higher, gasoline's going higher, and now you got people with these big trucks. And you're like, Tim, that's so simplistic. And I'm going to beg you at home not to make it harder than that. Are you going to drive less if you have to fill that beast up and you're getting low mileage? Like it's just a trickle down effect. And I think understanding that, like, but and look, looking in the micro, like I'm doing right now with this crude chart, where crude hits the third ATR, and this is the first time it's broken below the 21 in a while. And I say that if oil can come off and you get some of those inflationary pressures to just come lower, and this is one of the inflationary pressures that affects you right away. It's right at the pump. The price of the pump will come down. And so that was the other issue heading into the housing explosion. Gasoline in 2008, and I was working at IBD at that point, $4 or $5 a gallon in Los Angeles. If you see gas, which is a tax, higher gas prices isn't one of those taxes that just affect people of means. It affects everybody trying to get to work if it exists. And you're like, well, they could take the bus. Okay, that affects the bus too. They got to raise prices. And so it's a lot to digest here. Don, you asked for the daily TNX?
First the weekly. We've seen
Sure.
it on the monthly. First the weekly,
Sure.
and then the daily.
Yeah, let's get that on the day. Let's do weekly, and then let's get TNX. And by the way, this is the first time in a long time oil has hit the third ATR on a weekly chart. I failed to mention that. TNX on a weekly chart. Look at this. Its probabilities tell you that it should at least rest, if not pull back. But I want to take it out just a little bit further. When's the last time this hit 3 ATR? Okay, this is 2018, Don, in September. And Don, I know you know this. The pain of the fourth quarter of 2018 was so freaking significant, right? Because was it Yellen or Powell at that time?
Powell
wanted to raise rates.
Yeah, he
And
made a big mistake at his press conference, and the markets let him know it, and he hasn't made a mistake like that since.
No, and so anyway, like here's the start of 2019, and then you're like, well, rates peaked, and I'm telling you, it's not instantaneous. These relationships typically just aren't. It takes a while to catch up, and stocks got destroyed in the fourth quarter of 2018.
This chart is very telling right here because you can see looking back. I see 1, 2, 3 points there. You touch the +3 ATR and you immediately pull back. 5 weeks ago you touched it and you've gone higher now for the last 4 or 5 weeks.
Yep.
And that coincides with the 10th. Actually, it was the 17th when I did that lunch and learn, that was the week that tech stocks really started rolling over hard.
This market right now, I mean, back when we're looking, 2018, 2019, right here, and we can take it back further in a minute. The Fed still had tools at their disposal. I don't know what the Fed, I mean, the Fed can come in and start buying bonds. And Jay Powell, that's a tool. I mean, there's a lot of tools still at Jay Powell's disposal. And let me not profess to be an expert on what Jay Powell can and can't do. But if he just comes in and buys bonds and drives bond prices higher through demand, whether that demand is real from individual investors, institutional investors, or Jay Powell, bond prices go up, yields come down, and markets potentially stabilize. But this right here of interest rates going higher on a weekly time frame, here's the beginning of the year, 125. I mean, they come. This is not them wanting this to happen. I mean, they do not want this to happen. What's happening right now, and everything's there right now to have this either proceed like normal, like Jay Powell comes in, probably buys some bonds, stay or get somebody to buy bonds, so bond prices can go higher because with demand, and then yields come down. But if something isn't done, and oil took a step to that direction yesterday, it was a big deal what happened with oil yesterday breaking. You got to get some of these inflationary pressures off people. The right now, the reality of oil higher, shipping prices higher, food prices higher, the inflationary factors affecting Americans right now, well, globally, but we're talking here in the States, is tremendous. And you had that happening in a different time frame back in 05 into 07. The difference being that Bernanke was doing it on purpose to slow down inflation. Here, the Fed has no choice in the matter. It's just happening, and inflation still isn't slowing down.
Right about the middle of your chart there, Tim, you can see that counter trend. Rates were coming down. No, stay right there on that chart. Rates were coming down around August of 2019. Rates were rising. Keep going over to the right. Keep going, keep going, keep going, keep going, keep going, keep going. So they're coming down, and then they hit there. They bottomed, and then they had a bounce.
Yep.
So that's August, September. That coincides with a very strong rally time in the market. So for growth stocks too. So this is a situation where interest rates are rising, the TNX anyway, but it's choppy. It's not in the straight 45-degree angle up that you're seeing right now. So it was more pronounced. And then you've got the rollover in early 2018. Two other things that are weighing on the market right now is, one, I think Biden's tax policy. And the second, raising taxes, raising the corporate tax rate, raising capital gains taxes. And also, the theory is that the numbers in COVID are coming down across the board. They're still locking down over in Europe. And I read that Michigan and some northern states spiked over the last week, and nobody seems to have an explanation as to why. So the assumption right now is that the economy is going to be completely reopened. But if COVID goes counter trend in some areas, the pressure to open things back up, as happened in a couple of states over the last 2 weeks, it won't happen.
Yesterday's big break, Thursday's big break in the market in the afternoon just happened to coincide with Paris or France, what you had said, acknowledging they're going to lock down for 4 weeks. And so
that's unthinkable in the U.S. right now.
Yeah, because I'll tell you what, here in Texas, Greg Abbott has just, I think last week I was in, or maybe the week prior, like, we're open. And you know, let me know, I don't want this to delve into was he right, was he wrong? But if you see, I mean, just I think if you see rates spike after the reopening, it's going to take like 2 or 3 weeks, though, right, to see that happen. I mean, I don't know how, like, incubation period and whatever.
Well, I mean, that might be part of the explanation for what's happening in Michigan, for example, is, you know, things are getting a little bit more lax. People are itching to go out and do things like they did before COVID. And the reality is the amount of people that have actually been vaccinated it's increasing nicely, but it's not to the point where you can just go out and do everything like you used to and not expect any ramifications from it.
Yeah, and
I went to a 200-person wedding last Friday, and there were like 8 people with masks on. It's like it was like COVID never even happened.
yeah, and it'll, right, wrong, or indifferent. You're not gonna. It took after Thanksgiving, like it took a couple weeks to see that spike come in for COVID, and then it took after Christmas in January to see that spike come in. It took a little bit, and who knows what's going to happen. But Hunter, I think you're on it. The vaccine isn't as prevalent as it needs to be right now, potentially. And I mean, heaven forbid they find out that there's a strain out there that can sneak past the defenses of the vaccines. That could be weighing heavily on markets as well. And the markets are a forward-looking vehicle. That's also the issue here too. Like markets do react in real time to real news. We all know that, but in general, the markets are a forward-looking vehicle, like by 6 to 8 months. And so there's a lot, like we talked about it. Was it last week or the previous week? The performance chasing that took place with Kathy Wood's ARK funds, and there's going to be a bunch of people trapped in those if those expeditious names, those for lack of a better phrase, or maybe you might call them aggressive names, growth names, if they don't respond in 2021. And it's going to be a really tough year for a whole bunch of people. And like look at is SPX green? I think it is. Yeah, it's green today.
Yeah. So you just showed the weekly weekly TNX.
I'm sorry.
And I'm frankly surprised at how stretched that is across the 3 ATRs over the last 6 weeks. So I know it's going to be just straight up on the daily.
Yeah, let's take a look at that, because I'm going to show you a chart that I think is real interesting here too. Just look at this. But Don, this just looks like after Biden got elected, 2020. Look at you're looking at a chart of small caps. Let me get these old. I never took these off. Remove. Look at what small caps did. Here's 11. So Biden gets elected. They spike up to the third ATR.
Yeah, 11/9 was the reopen date. That was when they announced the efficacy of the vaccine, and everything changed on that day.
And then it's just been, I mean, you come up to the third ATR, you're not getting these deep pullbacks. And if I show you this on a weekly chart, like it doesn't, Uncle Tony, just look at this. I mean, it's straight up. It's like Paul Abdul, straight up. Now tell me. No, nobody likes the Paul Abdul.
Nobody.
Okay, just making sure.
Although tech stocks have been caught in the hit and run.
There you go. Hunter got it. Alex is like,
I didn't get it.
Was that before that? That might be before you guys were even born. Jesus.
I know of her because my mom was, like many middle-aged white women, addicted to American Idol back in my middle school days.
Middle school days was American Idol for you?
I would say so. Around like 11 to 14 was when it was really popular. What is that, like, I guess about 10, 11 years ago? That'd be Carrie Underwood-ish times.
Sweet Jesus. So you're making the show younger, and that's what we need. So but this is just, it's not giving up either. And that's the whole thing. If it gets to the point where people want to get out of just everything, these have a really long distance to fall. S&Ps have a really long distance to fall. And I think it's all there. Like I think that, and by the way, I've done this, I don't know, I don't want to assume that everyone's seen it. Like, let's look at ZN. So we're going to, Don, this is ZN is price. And what you want price to do is go higher. Look, price turned green, okay? And we can do this in real time. So let's take this down to a 5-minute chart. So if just for everybody home, If ZN prices go higher, 10-year notes go higher, yields come lower, and you typically see stock prices move up. So we'll get this on a 5-minute chart, and you'll see that, let's see, 9 o'clock, you can see the trends start to move higher. Now you've got this little flagging action here. So let's just do SPY. Yeah, they look similar, right? SPY is green now. How about QQQ? QQQ is green now. Like they look similar. These are moving in lockstep today. So when I do ZN and someone will say, let's get it back to a daily chart. Oh, it can't go any lower. They've got a rebound. And I say that's horse hockey. That's not true. Like if you invert the chart, so I put a minus sign in front of the chart, and I'm just going to invert it real quick. And I'm going to put it here on a chart that everyone, not an ATR chart, just a normal standard chart. Like you'd look at this chart. Oh, come on, Zoomer. Oh, I screwed up the zoom. Let me see if I can get it. Let me just restart it. I'll auto zoom it if it lets me. Am I asking too much of Thinkorswim today? Probably.
So that's the inverse of the TNX is basically
yes,
the
yes,
ZN,
yes.
right?
And then what I've done is I further confused the issue by putting a minus sign in front of the ticker to show you just how bullish this is. And it's broken out of that flat area right there, that little flat base. And it could potentially go higher, like a tremendous amount higher from that flat base. And so someone would ask, well, you inverted it, right? And I'm like, yeah, I inverted. So let's take it down to its natural state. And I'm telling you that this thing can go much, much lower. And so if TNX prices, which can't get above, just look at this, they're riding the 21, then they can't get above the 8. Now they can't get above the 5. If they can't move higher, because there's zero demand for these notes, nobody's buying them. Hey, pal, step in and buy them, right? That's what people are waiting for. Here's like another shelf down here at the 130 level. And you're like, Tim, 131 to 130 isn't a big jump. It is in bonds. And here's another zone of support. And then, dear God, if you let go of 127, I mean, it's going to get really ugly. And think about all this.
Based on technical analysis, you're coming into an area of support.
Yep, huge.
That's right in the middle of the chart there. And that if it doesn't halt the downtrend, we've got, as Mr. T said, prediction pain.
It's going to be so freaking bad. Like it's going to be ugly. Like everyone that's they're going to sell everything, and you're going to see inflation spike. You're going to see commodities spike, and you're going to see the dollar spike. It's going to be awful. And well, why is the dollar bad? You need a lower dollar for the S&P stocks that trade globally. The lower the dollar goes, the better it is for global S&P stocks. Not always. The dollar can go higher and markets can go higher. There's nothing in absolution, but generally that's the trend. If these rates can't hold these levels right here, I mean, if these notes can't hold these price levels right here, there's so much tumult right now in the markets, and you don't see it on small caps, you don't see it on S&Ps. But man, you're about to feel it. You're absolutely positively about to feel it. And so, but who knows? Like the notes are green today. Look, notes are green today, and markets went green. And like if I look at this, GME, Don, look at what positive notes do to the meme stocks.
Jesus.
Look at what it does to SPX.
So Tim, can you speak to, obviously, the common solution is the Fed's got to step in and buy bonds hand over fist to try and drive up price via demand to put a stop to the yields increasing. Aside from that, what could possibly cause prices to go up on these bonds, other than just individual investor and institutional demand? Because in my mind, that's pretty much our best two options. I
don't know. I mean, I think if the job market gets better, I think if more people go back to work, I mean, I don't know though what's driving job demand. I honestly don't know. I mean, Hunter, other than the like job demand growing, I think oil's a big step. Oil's a huge step to maybe just pausing here. I genuinely don't know. I, I'm I, I think that 2021 is not going to be the year a lot of people thought, just based on what you see right now. Like we could look back on this, everything in hindsight, we could look back at this and go, but I think Bitcoin's kind of forecasting this, right? Like there's been this whole devaluing of the dollar, and people are, some of it's self-fulfilling prophecy, but you can look at Bitcoin, you can look at Ethereum, you can look at Litecoin, you can look at Bitcoin Cash, which is I don't think is a great thing, but look at other asset classes right now, like non-fungible tokens, which is a whole different show onto itself. You
Yeah, that's
know,
interesting.
like we could talk about that.
Yeah, let's not do it.
No, we're not going to do it. It's so esoteric to try to understand what's happening on the blockchain, let alone introducing assets that you don't touch or feel per se, but own. But for anybody who wants to try to make an analogy with non-fungible tokens, I give you this. It's like owning the music catalog of the Beatles or any song. Just not don't put like supergroup like the Beatles. Just know that you own the rights to something that can be played over the air, and people owe you money if they do it. You own, just because you can, you could tape a song, you could record a song, and it's yours, and you can play it and not pay a damn soul. But if you want to do it commercially, you're going to owe somebody big. And so I view non-fungible tokens in that light, and it clears it all up mentally for me.
I think it's going to be one of those things where kind of like buying Bitcoin years ago, like in 2013, where you see an initial spike and then it's garbage for a while, and then ultimately it does have value.
Yeah.
But it's mind-boggling what people are paying for a short little Zion Williamson or LeBron James dunking, or a poster of,
Yep.
Tom Brady, or Gronkowski made his own NFT collection.
So did Mahomes.
So it's crazy.
Yeah, and look, and a lot of people are going. People like the four of us aren't in there buying Mahomes $88,000 NFTs, but people who are trying to diversify out of other assets, such as physical art or dollar-based assets, absolutely are. And it's no different than cars. And if you look at what's happening on sites like Rally Road, the fractionalization of everything. Alex, you touched on it without even knowing it. And so when you said that you can split your couch payment up into X amount of payments, right? You could finance the couch. Everything is fractionalized now, where you can split up the price. I mean, think about it. Really, Bitcoin's been a leader in this. You could buy $1 worth of Bitcoin years ago, even if it was trading 1,000 or 10,000. That fractionalization is now prevalent everywhere. And if you don't understand, like, look, a lot of the people that watch the show, they're not watching NFTs. They're like, what the fuck is an NFT? Just Google it and then be lost for like 3 hours. Because that's what happens, right? You're like, what is this? And you're like, you got to do a lot of research to figure it out. But look at sports cards. You can't buy sports cards at Target or Walmart because there's people waiting there for when the person comes in to stock the shelves to clear them out. And the breaks, like, they're they do these breaks online. You can Google all this. Topps Inception got released at $175 a box. Panini puts out an $8,000 National Treasures box. And you're like, well, who's buying an $8,000 box of cards? No, they're selling you a spot for a tenth of that. And if you get the card, you get the card, and they break them. They're fractionalizing everything.
I've got friends that have set up algorithms to purchase card releases in bulk like that, because you can't get them. It's kind of like when people had set up algorithms to buy PS5s and the new Xbox. Same thing, and then they're just reselling them to people at higher prices.
Yep. You're 1,002% right there. And so, like, now Carson Wentz is gonna. I was actually about to say the world is littered with people who thought they were going to put their kids through school. Like, a lot of people have Ken Griffey Jr. cards from '89 Upper Deck, and they're not really worth that much. I went home dude, and let me find it for you, Don. I found my collection. I didn't get to go through it all. Where is it? Hold on. It's on Twitter. If anyone is watching Twitter, let me see if I can find it. You remember Captain Lou Albano?
Oh, the captain. Hell
Dude,
yeah.
well, yeah, like, cause I was a fat boy and my brother was a big boy too. The guys at the shop used to call us Captain Lou and Little Lou. Let me see where it is. Hold on. Uh,
Did he
no,
have the
that's
rubber
okay.
band in his beard?
Yeah, he totally does. I've got a number of them. I'm literally about to just go out to the room and go grab them if I can't find this. But I sent a picture of it. There it is. Captain Lou.
Is there a Cyndi Lauper card along with
I
that?
have one. Yeah, no, I've got one. I just didn't take a picture of it. And then this card right here, this is not a PSA 10. Hunter, that card sold for $30,000 the other week.
I saw
Garbage pail
a
Kids for 85, 86.
I saw a Wilt Chamberlain card that sold for 400,000
Yeah,
yesterday on an account I follow on Instagram that posts cards increases and decreases in value kind of thing.
yeah, like I'm telling you, the other asset classes. So, and Hunter's been on this too with DraftKings and Penn. Look, money, there's 1.7. So last year was the first. Are you going to go look at cards, Alex? Is that where you disappeared to? Go find your card collection. So just fell off his chair, Hunter. Whatever you said, he just made Alex fall off his chair. Um, I've got a lot of Bruce the Barber beefcake, Don, for some reason that I found. I didn't have a favorite wrestler. I just liked wrestling cards at the time. So that was when I was really young. Anyway, there's money the money that's on the sidelines from the pandemic. It's being saved. So the savings rate went up. It's the first time in the history of a recession that the savings rate's gone up. $1.7 trillion is on the sidelines right now. I've got, by the way, anybody wants these articles or Tim, where are you getting 1.7 from? Look, the Dallas Morning News just did a whole write-up about it, so I read it. Where is it going? And is it going into shares of Amazon, or is it going into Penn? And not Penn the stock. I think Penn the stock, but Penn the app in certain states that it's approved in, or DraftKings where it's approved.
Or
And
Robinhood.
the money the states are taking in. I don't understand New York. You know, like a lot of things with Cuomo, I don't understand. That's as political as I'll get with that. But what a dipshit. Open up sports gambling. Your entire state drives to the border across the bridge at New Jersey. By the way, there's there's places opening up right on the other side, just so you have a place to park and get a cup of coffee and free Wi-Fi so you can place your bet, go under the tunnel, cross the bridge, and you're back in New York. You don't have to live in the state to make a bet in the state. You just have to drive to where the Wi-Fi signal can place the IP in the legal betting area.
Hey Hunter, do you remember Pokemon?
I wasn't a Pokemon kind of
Is
guy.
that where you disappeared to? Are you Charizard?
I'm going back to that because I pulled something out that I saved as from when I was a kid. Check this out.
I told you he went and found cards. That's effing awesome.
That's the Charizard.
Yeah,
Look at
no
that.
shit. That's all. That's real. Like that's sold.
Yeah, that's the real Charizard, mint condition.
Get it graded.
I know. I gotta get it graded and see what it's worth.
No, as they say, Charizard can't tear an ACL.
Yeah, I was at home back in Jersey, and I asked my dad, I was like, "Hey, do you still have that binder of all my Pokemon cards?" He's like, "Yeah, I didn't touch them." And I also found my old original Super Nintendo, and it still works like it's brand new.
Video games, as an Stockers, if you haven't followed along and you're just giving me the middle finger right now, I understand. But here's the thing that we've done. We've transitioned to other assets. Did you just give me the finger subconsciously, Hunter? That was great.
No. I wish.
My wife does that move. She'll go like that to me all the time. That's why I thought
There's a couple videos of Trump doing that, maybe intentionally or not, but some good ones.
So asset classes are where the money, like there's unopened video games like Zelda, the dudes with the mustache, what are their names? Mario and Luigi. And
I used
like,
to play both. I played
like
Zelda on the Nintendo back in
the
like
Wow.
first grade.
difficulties is because there's very few unopened packages because everybody played them, right? Nobody kept them in the, that if you find them unopened, you send them in to get graded and they're selling for hundreds of thousands of dollars.
Where do you send cards to get graded? Is there like a site?
You can go to PSA has a backlog right now of 1.9 million cards. About 3 years of
Wow.
like they just raised their prices. PSA was a public company. You know, Mark from Buffalo has all the scoop on this, and this is who I talked to get most of my knowledge. PSA was a publicly traded company up until about a month ago. They just got taken private by Stevie Cohen and a couple other big investors who now owns the Mets, who is pretty much the basis of what's that show on Showtime?
Billions.
Um,
Billions.
Billions.
Yeah, a
Have
lot of
y'all
people
Good
watched
say
it?
show.
that's based on Stevie Cohen.
I haven't watched it.
Um,
I've heard it's good.
Oh
It's pretty
yeah.
good.
You haven't
I seem
watched
like
that?
I like the main character guy.
Bobby
Bobby
Axelrod.
Axelrod.
Yeah.
That's Don.
Yeah.
look
No,
at
I'm
this
Taylor.
morning, GameStop talking about games. That is insane.
I think they have earnings on next Tuesday.
Oh my gosh, earnings.
As if that matters.
You want to see the
Just-
Yeah,
implied
right.
volatility of that? No,
It's
that's the
gonna be
whole thing too.
interesting.
Yeah, like people are like the 2-day chart of GameStop is beautiful. Let me show you this real quick. The 2-day
DraftKings is
chart.
having a good day.
Who is?
Yeah.
DraftKings.
DraftKings.
Oh, it's taking it.
Uh,
Oh, you know what is that? You know, let's go back to a second because is it too easy, Alex, where it's the final four and someone just got the idea that I should buy DraftKings because I just put a shit ton of money into DraftKings and maybe I should buy their stock and reap the
They
benefits.
should buy the stock. That's
Yeah,
right.
everyone collectively just did that. Like that's the whole thing, stockers. We're like, no, it's too easy. It can't be that easy. No, sometimes it can actually be that easy.
Be dumb. Follow price.
We as humans make it extremely hard. So I got it on a 2-day chart. Let's do both stocks. GME. Let me zoom in.
I don't know how you could trade this stock. It's so all over the place.
Dude, I've got a good chunk of it right now.
Oh, you bought some?
Oh, I've got some, yeah.
Did you buy calls or stock?
I got spreads.
Okay.
I've been burned on the calls before where I didn't like, so to try to salvage some of it, I had to sell some. I'm like, let me just start with spreads.
Yeah.
But look, it says view options. Yeah, because I got options on there. So this 2-day chart is really nice. Like that's what you want to see. I'm curious what DraftKings is.
That's funny. That chart looks good. It's just that you got to understand that the spread between the high and low is like 30%.
well, I mean, just a few days ago, it got cut in half in a matter of 20 minutes.
Yeah.
Not for the faint of heart, and not to own while you're driving, trying to come back from
Oh
Pennsylvania.
gosh.
Oh my gosh.
no.
And I'm like, this is a disaster. And Remy goes,
Remy,
disaster?
take over.
He's like Scooby-Doo.
Hunter, you should tell them about your drive-through experience or your day trading on your and the drive-through.
Oh my God. Yeah. Back before I was hired with Revere, I would go to just like Whataburger, for example, and I'm watching the market, and I would trade a decent amount of very short-term options on something like Apple or Microsoft, and essentially I was using stochastics, but not actually looking at them, and I would buy it while I was in the drive-through line and sell it like 3 minutes later and make like $30 and be like, okay, well I paid for my Whataburger. And then one day I was in the drive-through and I ended up losing like $500. Like, yeah, I'm never doing that again. So
That was
one
an
of those-
expensive burger.
it was.
I was in class, and anyone who's traded options knows this. Has had this happen to me. Had it happen to them. I was in class getting my master's, and it was on a Friday, like in that Friday, Saturdays. And I had a really heavy trade on when I shouldn't have had a heavy trade on because I couldn't pay attention to it. And I think it went down like 30K, and like I'm watching on my phone, I got my charts up, and I lost like 30K like that. And I'm like, I literally just bored out in front of everyone. Like, because I wasn't thinking, I was having an out of body experience. I'm like, what the just happened? And I didn't realize everything around me screeched to a halt, and they're all staring at me. And I look at the professor. He goes, "Is everything okay?" I'm like, "No, like I can't pay attention to you right now, old man. I need to focus on what the hell just happened." Oh my God,
I know.
those Friday, there was periods of volatility that I just realized I can't trade during class days. It's the worst. It's the worst. Dude, day trading is the best, Hunter. It
Oh,
sucks
no,
really
I
the
actually
high.
had a lot of fun doing it, but what I was doing was probably, for lack of a better term, asinine.
You
And
know, I do a lot of 0 day trades. Like I've got one on SPX right now where I'll sell iron flies, or I'll sell spreads on like SPX. 0 days are when things expire. Monday, Wednesday, Friday for NDX and SPX. I've got a SPX 20. Now, you know what? Who cares? Let's look at DraftKings. DKNG.
I got one point to make on DraftKings, just something to think
Okay.
about. So obviously there was no March Madness last year. March Madness is one of the, if not the biggest sports betting events.
Devil 6.66.
Yeah, and it looks, I mean, I've got it on my list to talk about because it's one of the stocks, the leading stocks that has survived and still continues to look like a leader. But since the last March Madness, which would have been 2019,
Mm-hmm.
and I don't know the exact number, so don't quote me on this, but there's at least, I'd say, 5 to 8 new states that have legalized, obviously, their product since that time. And if you look at their earnings from first quarter last year, I think revenue was 88 million. But
I'm
that
sorry.
was
Did you
with
say the show's better without Danny?
no, I think Alex actually said that a few seconds
It's
ago.
weird. Like I've got this earpiece in, and I swear that I saw your mouth move, and you said the show was better without Danny. Is that
No,
crazy? I don't know why
but
you would say something like that out loud, but whatevs.
all I'm saying is that it'll be interesting to see how all these new states, as well as stimulus money literally hitting the week before March Madness starts, how that affects Penn and DraftKings, BetMGM, FanDuel, all these different
You
names.
know what? I don't look at MGM. Is MGM's ticker legit just MGM? I haven't looked at
I
it.
Yeah.
think so.
Thanks. But here, real quick on Penn. What this week in Penn? I mean, this is a bullish weekly chart. I mean, this is a really nice looking chart, but what a range! And I didn't expect to see that in Penn.
Yeah, following the S&P inclusion, it
Yeah,
pretty
that.
much gave it all back and then kept going lower.
I'm gonna look at MGM real quick. Is that wow? Is it? Well, hold on. Let me take this out. Oh, we've got a long way to go to the high.
Hmm.
We're above this little hump here. But like MGM, who's the guy who's the spokesperson? Is he played Ray Charles in the movie?
Uh,
Come on. Was he in Living Color? Was he in that? Okay, in that.
Jamie
I don't know.
Foxx?
I feel like I know, but
Is it Jamie Foxx? Is it like I don't understand the spokesperson for MGM. I see billboards for Jamie Foxx. I think he is the
yeah, I
spokesperson for.
just Jamie Foxx starring in BetMGM's new brand
Well,
campaign.
there you go.
First thing I pulled up.
Yeah, like is he like Dave Portnoy with Penn makes a ton of sense with me. DraftKings has a different promotional model where they're getting a bunch of former players and celebs, and they all do little web shows on Twitter and Facebook. Like Jim Cramer has one. A number of ex-NFL players have them. Baseball players have them, and they take
DraftKings
someone
is also
from.
partnered with Bleacher Report,
Yep.
who has a pretty big following
Yeah.
as well. Like
That
Ocho
doesn't make sense
Johnson
to me.
is the face of Bleacher BR Betting, which is partnered with DraftKings. So they've got a unique advertising model, and in my opinion, they have the
I made a
best advertising.
mistake by not. I think by not downloading the Barstool Sports app when I was in Pennsylvania, but I'm glad when the markets are closed. Like I don't want to watch sports with stress on the line. Like I don't even care about that. I used to. Don, you grew up in Pennsylvania, right? Or where'd you grow up?
Yep, Jim Thorpe, Pennsylvania.
Yeah. So where I grew up,
I know that
is,
area.
do
No,
you?
you
Yeah, well,
don't.
you're Southern
I used
Jersey,
to
right?
paintball over at the Jim Thorpe paintball fields over there. There's like one of the biggest paintball like businesses in the country over there.
This is fantastic because there is a dude who watches our show who gets royally pissed every diversion. Just wants the stocks going up. Like just
I have a
stop.
few if he needs. I have a few stocks. We'll go over.
Paintball? You're talking paintball? Well, hey, hold on a second. I'm about to talk cable television, so
You
screw
got to
you on
suffer
that.
before you get your candy.
Yeah. So I grew up in such a rural part of Pennsylvania. Like we didn't have cable, Don. We just had the big antenna in the field. And when the NCAA tournament used to come on, I mean, it was basketball to midnight, like on broadcast TV, and I would be like in heaven. We had no sports, like we had nothing. And Thursday night, Friday night, first nights of the tournament, used to love it. Now I don't give a rat's ass.
I
But
love it.
money will make you watch Colgate play basketball today, right?
I like Colgate. They haven't played anybody. Look, I love college basketball. I love March
And
Madness.
now you're
So
giving me analysis on Colgate. This is so great. Do Oral Roberts now because that's trending on Twitter. Everyone's hoping for an Oral Roberts Colgate matchup.
well, I don't know as much about Oral Roberts. I know a little bit about Grand Canyon University, which made their first tournament appearance.
Geez, the
Um,
fighting rocks of GCU.
That's
I
down the
guess,
street
yeah.
from me.
I heard they
30 minutes
practice
down
in
the
the
road.
Grand Canyon.
Grand Canyon's down the road from me.
Alex is having, hold on a minute. Let's just acknowledge that Alex is having a breakout show. He left his chair, muted his camera, went and got a Charizard, and now he's chimed in with GCU? Damn, that's right down the road.
Hey, I'm from the East Coast. We talk out a lot.
That's the
Oh,
Lopes,
you
isn't it?
have a great show.
Let me pull up Grand Canyon University here.
That's public company, right?
Is that the Antelopes?
No,
Fighting
are you guys?
Lopes?
Wait, maybe I'm thinking of the wrong school.
No, you're thinking of the right school, Alex. You're thinking it's either Lincoln Tech or GCU. I think you're thinking of the right.
Yeah, it's in
school.
Phoenix. I'm right.
Yes,
GCU's in Phoenix.
yes. I thought they were
Grand
Lope.
Canyon
L-O-P-E.
Education, ticker symbol LOPE, L-O-P-E.
Yep.
That's
because
different. Yeah, it's different.
Wait, do you guys remember Dan Majurley? I don't know if I'm saying that right. The shooter that played for the Suns.
Marley.
Dan Marley.
Marley.
Dan Marley was great.
Look, please don't crucify me for what was it last time I pronounced wrong? SLB. I'm not even going to pronounce it.
Schlumberger.
Yeah.
Dan
that one.
Majurley.
Well, I never saw him play on TV. I know him from like the 2K video games.
There's a whole portion of our audience,
mascot,
and I'd go 90% of it, that is so pissed right now. Hold on, Connor, before you go on. Alex, one stock, just throw out one you think is going higher next week.
Let's go Upstart.
There you go. What's the ticker?
UPST.
All right, Hunter, go.
Gapped up huge on earnings
Don't
yesterday.
even need analysis. There's a group of our listeners that don't even care. They're like, they heard you say Upstart.
And Wayfair, Wayfair.
I hear they just got what you need. Go ahead, Hunter.
DraftKings.
No
TME.
way. DraftKings.
TME is having a good day. They have earnings on Monday. Be cautious.
What happened to the Dan Marley story?
Oh, I thought it was my turn to throw out some ticker symbols. I mean, I can talk about Thunder the Antelope, which is Grand Canyon University's mascot. Which I
hear the Thunder rolls from Garth Brooks.
That's a great song. Garth Brooks is an underrated artist. Okay.
What about was it Chris Gaines that he tried to turn into? Or did we just forget about that?
I don't know about that.
Google it real quick. I want to see your face when you pull it up.
What am I to Google?
Chris Gaines.
Garth Brooks just Grady trained that Lady Gaga and Bradley Cooper song. I mean, it was just a hit 2 years ago. Why does he think he needs to re-record it? That's just him trying to get airplay. A popular song.
He created an alter ego as a fictional rock persona.
I remember that.
Yeah.
A little odd.
A little odd. I think his ex-wife lives on the acreage that him and Trisha Yearwood live on together.
That's normal.
I hear that. Go ahead, Hunter. What else you got?
I mean, pull up MT if you can on a chart.
I'm sorry, which ticker?
MT, Arcelor, I think is,
Oh, I got you. Yep.
yeah. They've been pretty strong. I don't know what they're up today, 2.5%.
Mhm.
United States Steel X and AA have also been relatively strong recently, just two or
I like
three.
that chart with the pullback to the 8 and retaking the 5.
Yeah, yeah. And then an
NUE is in
last
the
one we had,
2121 in that group.
that
Nucor is
Nucor.
really
Yeah,
good. Look at
yeah,
that.
that one looks the
Look at
best.
that. Man, it's a little bit.
It's
Hold on.
extended.
Yeah, like this right here is when you're for me when I'm buying off the that's just elevated so much off the 21. It's give me a second, I'll do it real quick.
Kramer's
It
been
is.
pumping Nucor as well.
It's
He's been
eight.
big
It's
on it.
8% above the 21.
Hey Don, can you go over how you would handle upstart on that gap, like gap up?
Yeah, when something goes up 89% like that, if you didn't get it near the open and let it and when it was only up 40%, you have to wait for a pullback, in my opinion, to the 5 or the 80 MA now.
Where is that now?
Right now, I think
91.
it's going to be a while. Right now, it's a
Okay,
casino.
Yeah.
gotcha.
So if
Fair
you didn't
enough.
buy it on the gap day,
Yeah,
and then
missed it.
yeah, now you got to wait for a reasonable pullback. But something that goes up 89%, let's see, was it 89? Yeah, 89% on 1121% volume has to be at the top of your watch list because it's just fits the model of big winning stocks gapping up on earnings. Wall Street's off sides. Growth managers are dying to get into it. And you gotta own it. You just gotta look for some sort of a low risk entry point.
Okay.
And right now there isn't one.
What else you got, Hunter?
DAR, right on the 21, just a former leader that I mentioned back at the start of my time with Revere.
Did you see
That's
VAR?
ran up. DAR, Darling
Thank you. I'm
Ingredients.
so sorry.
Yeah, just I was going through and I noticed it was pretty much hovering right on the 21 right here. And it actually was showing some pretty extreme relative strength while a lot of other stuff was looking like garbage over the last couple of weeks. But just one that's close to a reasonable entry that's been a leader. And lastly, Matador, MTDR, and Fang, both reclaiming the 21 today, two of the leaders on the in the oil space.
Now let's look at what oil's doing in the last few. So oil up. Oil's about 34. Interesting. All right, Alex, you got any more stocks real quick?
Just Wayfair and Upstart were the two that I wanted to focus on.
You got it?
Wayfair has got a really nice long base.
Mhm.
You could probably see it better on the weekly, but if it breaks out above that high, not 369 on the left, I think it's 349.
349.
Yeah, around that area. If it gets above that, it could be potentially a nice name. We'll see. I don't know. I've been wrong many times, so.
Wayfair's base kind of coincides with like Amazon's base. Both kind of peaked right around end of August, September, except Wayfair looks a lot better than Amazon since then, but just similar time frame compared to some of the big tech stocks.
All right, stock owners, market lovers, really quickly, if you want to call and complain, or you want to call and say this show was so much better without him, like Hunter did, you call 855-732-5932 and email Dan at Revere Asset. Here is all of our email addresses. You can get a hold of us. If you want more of Alex's research, more than happy to send it to you. Hunter is more than happy to send it to you. Don has the video tonight. He'll post it up here, Daily Market Insight. 21 over 21, we'll get to a preview of that here in a second. But listen, don't sit at home. So if what I was talking about earlier with the TNX or anything in terms of trending stocks or how do you play this market, and whether you're a client or not, don't sit at home wondering. If you're watching this, be interactive with us. We're more than happy to absolutely share anything we can with you. We're here to help and empower. 732-5932, 855 in front of that It's easier to call. That's just, there's no bones about it. Emails get really long, but you're more than welcome to email any one of us. Twitter at TJ Razor. I prefer Twitter. I get messages all the time from stock nerds. I love it. My DMs are open. If you want to, you don't have to follow me. It's fine. Just shoot me a message. Don is right here. Do that all the time. Not now. That's what I want to choose. Where's his Twitter handle? Jeez. Don White. There it is. If I just hover over it. D Vandenbord. Oh, I don't know why it goes away, but I'll hover over it and it'll come up. D Vandenbord is how you get a hold of Don. Any of the research you want is yours. Just shoot me a note and I will send it to you. Don, give me a real quick hit, if you will, a preview of the 21/21, some things you're looking at.
They're really the 21/21 list 2 weeks ago made a hard turn along with the market away from software and tech stocks and into some of the things that were working, and there haven't been a lot of changes to it. So some of those are consolidating, but they're still holding fine above the 21. I mentioned Upstart. That's something that will get squeezed into the 21/21 because it's got to be at the top of a watch list after a move like that. Two stocks that I want to talk about that have survived in our portfolio still, two tech stocks, the only two remaining from what we've owned, and this is simply because they're survivors, is DT, which is Dynatrace, holding the 50-day moving average, still below the 21 though, so it's not in the 21/21 list. But there's been such devastation of some things that we've owned and got stopped out on that have continued to be down 40 to 50% that it just reinforces the fact that you've got to stick with your stops no matter what you think. And the second one is apps, APPS, which is very volatile but doesn't want to give up the ghost. So DT and apps are the two.
That's a bullish looking chart.
Yeah.
Really volatile stock.
Yeah. And those, don't let those bars fool you. It's got a very wide ATR of almost $10 a day.
Let's do that real quick. I want to, so Don, what percentage of ATR, do the percentage for me or for stockers, please. So it's $10. Look, this is where Don's looking.
Yeah, like 970.
Yeah, so right here, over the last 21 trading sessions, that's the price range. So by percentage, what is the ATR of that? That's what people will be shocked by this.
I'll get you the exact number.
11.6 roughly.
11 points. Yeah. So be prepared for a daily 11.6% swing on a stock like that. And that's why you got to.
What you just said there is super duper important. Let's just pause on that. So apps is traversing 11.6% over the last, on average, not it's the average. I mean, it's much more on some days, a little less on some other days. It's averaged 11.6 over the last 21 days. Now look at a stock like Game. So GameStop on a daily basis is on a 200, Hunter, give me the percentage on this real quick, please.
47.52.
Yep.
Only 22% roughly.
And that changes so much because the
only 22%.
Tomorrow it could be 10%. You never know.
Yeah, it could be 10 or it could be 30. That's insane.
Yeah. Hey,
just understand what you're playing with.
Give me a random stock. Just pick a stock that in the NDX that has been moving of late that people would be surprised at.
Micron maybe.
Pretty important. What's that?
Micron maybe.
Oh no. How about GBTC?
Or that.
Or that. Okay, so this is a $53 product. Super bullish chart.
That's actually not that bad.
By percentage, what is GBTC?
4.2.
4.2. Now
let's it's 4.2 is the dollar divided by 52. Yeah. Sorry, so it's 8% a day.
Okay, 8% a day. So now here is Bitcoin, which I love Bitcoin here. What is the ATR? Here's the ATR over the last 21 sessions, trading 4,000. What by percentage is that? Anyone, please?
About 7%.
No, as Don just said, know what you're in. Understand that the ATRs give you that ability to to a lot. Boy, I'm so bullish on this Bitcoin thing. Is that how's Square doing today now that I'm looking at this?
It was kind of lagging around 220. Yeah, I mean, like for example, Etsy and Square were kind of at similar inflection points, and Etsy's a lot stronger today than
Etsy's having a much better reclamation of the 21.
yeah, and they didn't get whooshed as hard yesterday as Square
It's
did.
just the blender environment.
Yeah.
Yeah.
But I mean, like 5 days ago, Square was acting a lot better than Etsy. So like it's just back and forth, back and forth.
Is this that horrible fund, Don?
Yeah.
Yeah.
Oh my God, yeah.
That is awfulness right there. And then look at this. What's the ATR percentage? So it's 4.3 on a 2390 products. What's that?
It's gonna end up being like 16-17% probably.
And it's just so think about the different products that you can trade right now in the country. GBTC, OBTC. I don't understand who's buying this still. Like
Let's do a comparison on the premium versus the discount on these. So right now, Bitcoin trading at about 58,900.
I'm at 59,000 on the futures.
Yeah, so that equates to an adjusted GBTC price of 55.90. GBTC is trading at 53, so it's actually at a discount of 5% right now. That 58,000 computes to an adjusted OBTC price of 20, but it's trading at
24 nearly.
Yeah, nearly 24. So that's at a 19% premium.
Yeah.
Only somebody that doesn't know what they're doing is buying OBTC instead of GBTC, or they've got an advisor that doesn't know what they're doing.
Yeah,
listen to this point. I would wager, and I don't say this to imply that people are ignorant, but that is the case sometimes. I would wager that there's people out there that have gotten their stimulus check or are just wanting to buy Bitcoin in general that are literally buying OBTC because it's cheaper than GBTC.
Yeah.
Like that's the only thing in their head is, oh, it's half the price. I'm just going to buy this one because I can have more shares of it. When in reality, you're paying a 20% premium for the underlying asset of what the actual fund owns. And I truly feel like OBTC has actually been somewhat destructive towards GBTC. I mean, I think
it reminds me of UVXY.
The widowmaker or the divorce maker is what it is.
Yeah.
UVXY is, I'm telling you, man, the VIX products are all super not good. None of these are good. None of them. None of them. All right. Actually, Don, where you went is where I absolutely wanted to end the show. I wanted you to do GBTC. I wanted you to do the I was going to get you to do the fine. All right, stock nerds and market lovers. Alex, I'm going to ask you for one last thing, okay?
Yes.
So you're having a breakout show. Like, let's review your performance today. It's been fantastic.
Oh boy.
Yeah.
I don't know if you're being sarcastic.
No. Is it the beard? It could be the beard.
It's something.
I think
I'm not being. No, look, I don't actually pick up on sarcasm well, so I don't do sarcasm. Like,
okay.
I have to ask
Fair
people
enough.
when they're. Yeah, it's really bad. It's like Sheldon with the Big Bang Theory. I don't know when people are being sarcastic, so it's really bad. No, you're having a great show. So what you're going to do so this is how we get people to stick around. So normally, like when you watch the video metrics, like when Danny starts to wrap up, like they just fall off a cliff, right? And so they're not hearing like call 855-732-5932. They're not saying Alex at Revere, Hunter at Revere, Don at Revere to get a hold of us. Like they're not listening to the credits. You see what I did there? I got them to listen to the credits while I'm critiquing the show. That's called a broadcasting trick. But what you're going to do is when I'm done giving them how to get a hold of us, telling them maybe what to look for next week, you're going to give them a bonus stock. Like
I've got something extremely important as well to add to this. So
a double bonus?
A double bonus.
It's like you said earlier, the show is better without Danny. We never get a double bonus when Danny's here, Hunter. Gosh, I can't believe you don't think that's not going in the notes what you said. So
I'll throw in a bonus too. It's triple bonus day at Revere.
Bonus feature with update. It's like you should never do the show again.
All right. The bonus stock is growth.
No. we gotta come back to the screen real quick,
Okay.
just so people know how to get a hold of us. They can, if they want to watch Don mentioned his latest webinar. If you email Don, he'll send it to you. You can call and get it. There's a whole bunch of resources we have for you, stock nerds and market lovers. Just reach out, and as Don would say, touch someone. Go ahead, Alex.
The bonus
should I do my
stock
Danny? Should I do my
is-
Danny imitation to close out the show?
Absolutely. That's
Go
a
ahead.
bonus feature unto itself.
All right, folks. If you like
Oh,
what
wait,
you
wait.
hear, tell
Hold
your
on.
friends, tell your neighbors.
We got Alex to go yet, and Hunter to
He's
go
70
yet.
years old.
It's like if you saw Yosemite Sam at the old folks' home. It's
Oh
like
no.
the beard's a little more-
Tarnation.
Yeah.
All
Go ahead, Alex. What do you
right.
got?
The bonus stock is Grow Generation, GRWG.
Is that where people are putting their stimmy checks in the pot?
No, GRWG.
Gerard, thank you.
Yeah.
Jesus, GRWG. There we go. Is
There
that where
you go.
Stimmy's going into
It's the pick and shovel marijuana company. They have all the
Yep.
equipment and lighting, and they just put a
Hydroponics.
new spot down in San Diego. They have a new one in Arizona. So watch
All
out
right.
for that name.
Okay, Hunter, what you got?
Well, quick add to what Alex said. Green Thumb reported earnings Monday, and their CEO actually directly said that people are putting their stimulus checks into weed. So my bonus is not related to the stock market. I would like to share something that's equally important. Baylor in Texas, Gonzaga in Illinois in the Final Four. I've got Gonzaga beating Illinois in the national championship. 84-78 is your tiebreaker. Mark it down. Zags all the way.
Hold on a second. What do you get for that parlay? Like what are the odds you got on it? What do you have on
Well,
it?
you can bet on the Zags to win the national championship. I think the odds are like plus 200-ish, plus 220 maybe. Illinois, I think, is closer to like plus 4, plus 500. But you can bet on those 4 teams to be in the Final Four, and you're probably going to end up getting 8-1 odds somewhere in there.
Right,
Like
so
you bet
$1
100, you
makes
might
you
win
8?
800. Yeah.
$1 makes you 8. You heard it from Hunter. $1 makes you 8, Hunter. When is the tournament over? It's all being played in Indiana. When's the tournament over?
So the first round of 64 is today, and then tomorrow, and then the round of 32, I believe, are Monday and Tuesday, and then they take a break, come back to the Sweet 16, and there's a little bit more space between Sweet 16, Elite 8, Final Four, National Championship. So
Whole
probably
different
like
feel to the tournament with it being across like 3 different sites in Indiana. DV, what you got? Oh, take us out, Danny.
All right, friends, folks, if you like what you heard, tell your friends, tell your neighbors, tell your family. RevereAsset.com or call 855 Real Wealth. That's 855-732-5932. And we'll see you next week on Your Money.
That's pretty good.
It's so great. See you guys.
See ya.